Hello everyone, my name is Pavandeep Kaur and my student ID is AAP3029. So our today's topic is as intangible assets. So first of all I will introduce my friends. So it's Harman, Neha, Aanchal and Mehul. So before moving to the presentation, I would like to give a brief introduction about intangible assets. So the intangible assets are the assets like they are valuable to the organization that cannot be physically touched. We can take as an example like trademark, valuable information, patent, goodwill, brands, and many more. The assets are long-term assets and not easily converted into cash. So if we take a goodwill is technically an intangible asset, but it is usually listed on a company's balance sheet. So it is calculated as the difference between the amount of money paid to the acquired company and the fair value on book value of the acquired company net assets. So coming to the trademark is a way of identifying a unique product or service. Moreover, a registered trademark provides you a exclusive right to use license and sell to the mark. Patent provide exclusive right to produce or sell new inventions. When a company's patent is purchased from another company, the cost of the patent is the purchase price. So coming to the copyright, companies amortize a variety of intangible assets. It depends upon the nature of the business. Copyright provides their owner with the exclusive right to produce and sell artistic work. So after this brief introduction, my friends will continue with the presentation.
Hello, my name is Aanchal and my student ID is PNG3045 and I would like to continue with the presentation as my topic is the reasons for selection of accounting for intangible investment, the traditional categorization of expenditure for the organization in the chart of accounts and how financial statements and intangible investment is measured. This research provides a simple and clear-cut way to identify and separate the reporting entities and the investments of the company and provides a simple explanation of categories decided by the organization. And these categories are discussed on the base of the fair value deriving expenditure. In short, we can say that there is a fair value deriving expenditure that quickly measured of the intangible investment and simple ways to identify the expenditures. Also, it can be seen that it provides the details of the accounting standard of AASB 138. Also, it has all the reasons related to the expected changes from the adoption of this accounting standards and how the reports to all the stakeholders are included in the video.
Hi, my name is Mehul Kumar Shah and my student ID is DY31284. Today I'm going to speak about purpose of the study as well as similarity and differences between two studies. Firstly, purpose of the study conducted to comply to a research a paper explaining how the intangible investment are accounted by organizations. This is used for intangible investment and how Australia has accepted IFRS to account it for intangible assets. According to AASB 138 compared to the realized measure for the country. Second point of the presentation on my part is similarity and differences between both study. Both of these scholarly papers speaks of the accounting for the intangible assets of the company, while the first paper provides the detail about how the intangible investment are accounted for by the company in single accounting and how the organization generally creates separate accounts for all the expenditure and assets. The second one speaks of AASB 138 for reporting and intangible assets. They also include details about the inclusion of the unrecognized items, the form of intangible assets owned by the company in the financial statements. Traditionally, the expenditure was categorized by organization only in the statement traditionally of expenditure. As I explained, expenditure only was organized in the statement, Non-operating expenditure and tangible and intangible assets were also reported in a non-financial statement.
Good morning, everyone. Firstly, I would like to introduce myself. I am Neha Sharma and my student ID is AGL3010. In this presentation, I will discuss the differences and major implications for accounting practitioners. The article speaks about how it is important to learn about the various categories for the value-driving expenditures of the company and the other expenditures that even act as value-deriving for them. They provide significant implications and contribute to the understanding of the entire value chain of the company, assessing their performance and measuring it by carrying out the comparison, determining the value of the company, analyzing the corporate governance practices and how they comply with it, the procedure adopted by external audit by the companies. The research paper about AASB 138 speaks of the changes in the annual reporting practices and derecognition made mandatory for all. The reports carries out the comparison of realized measures under the Australian GAAP and the AIFRS and projected measures for the financial reports of the organizations for the year 2005 and 2006. Moving further, for major implications, the separate accounting of the expenditures as assets in terms of their future benefits is a better way to report the intangibles. It provides guidance on the key financial measures to be included and also compares the projected measures with realized measures, allowing the practitioners to identify differences between GAAP and AIFRS. Thank you.
Hi, my name is Harmanpreet Kaur and my student ID is AGL3005. In this presentation, I will discuss the major implications for regulators and external users. First of all, it will enhance the quality of external audit and will improve the corporate governance of the organization. It also provides a detailed analysis of the reporting of changes and how they are communicated to the stakeholder in the management discussion section included in the annual report. Secondly, it is also for the external users of the financial information of an organization. They are the secondary users who make use of the information of the company. Furthermore, it will also give the transparency of the communications in the financial reporting due to the adoption of the IFRS. In a nutshell, we can say that this group presentation is all about reasons why these research articles were selected and how they relate to the topic of the study. The major implications of the finding are useful for the practitioners, Australian companies who are responsible for the preparation of the financial statement, and also for the external users. Thank you, everyone.